part 3 of the homework 2 set goes back to the idea of being able to interpret a transaction as given in either, again, that homework 1, it was in accounting equation form, give me a verbal description. Here, it's going to be given a general journal form, give me a description of that transaction. Remember, these answers I'm providing are not necessarily 100% it. Like, there can be some variety, some variance here that's applicable. Right, so the first one up is right here. So we have cash, debit, fees, earned, credit. So just give me a verbal description of that would fit the bill. In other words, you're interpreting it, saying, given what I'm looking at there, how would I verbally describe that? So the one I suggest here, again, this is one, is what? That they finished jobs for cash customers, $65,000. Or they could say collected cash, collected $65,000 from customers. Now, again, if you're silent on that, and I say you collected cash, I'm going to assume that you finished the work. We can add that additional detail. Collected cash for jobs completed, $65,000. But it's kind of implicit, because why else are you collecting the cash? Again, the only other reason we'd be collecting would be, well, two. One, we've already done the work, and they're making good on an accounts receivable, so collected cash on account or on credit would be one. Or the other one would be collected cash, for jobs that we have yet to complete, which means for future services. So we'll see examples of at least one of those that I mentioned coming up in a moment. So again, if I'm silent, say just collected cash from customers, $65,000, it's almost implied that we probably just did the work and the collection of the cash were coinciding as, again, one of your 3 possibilities. Right, so this one, cash, debit, unearned fees, credit, so I just kind of alluded to that a moment ago. So what's a good way to phrase this one? So we know we got cash, and again, unearned fees, remember that's a liability account indicating what? That we technically owe our customers this $27,000 until we do what? Provide the service. So a way to phrase this would be say that we received the $27,000 from customers for what? Jobs to be completed in the future, or jobs as yet completed. Something that sounds like you haven't done anything yet. That's the important point here. It has to be something that says a future conditional. We have the cash, yes, but we have not actually done any work yet. That's the way it must sound in order for me to book the transaction that you're looking at here. That's the idea. The verbal should lead me to that transaction. If it does not, there's something missing, there's something that's improper with that. Right, for this one, dividends, debit, cash, credit, this one there's not a lot of variance here for how you describe it. Paid cash dividends, or you could just say right now, because it's the only type of dividend we're going to deal in this class anyways, I could just simplified this to paid dividends, $15,000, and that would be fine. 2 words, 1 number, and you're done. Because that is exactly the transaction I would book based on that information set. It's just debit, dividends, credit, cash, I'm done. Right, this one here, cash, debit, common stock, credit for $18 million. Nice robust figure there. So in this case, I decided to focus on the act of what you're doing, which is you're issuing common stock for cash. Again, if I just said issued common stock, $18 million, that would also be valid. Because again, what's our default position? That it was, in fact, for cash. All right, next up we have unearned fees, debit, fees, earned, credit. Now, go back and look at this one here. So that's what I'm indicating here. Basically, we had the initial acceptance of $27,000 in cash, and again, the offset was against the liability because we haven't provided services. So what's happening here is we're getting rid of the liability, so we're debiting that off the books and now crediting fees earned, because what happened? Because what? We finished jobs for customers who paid in advance $27,000. So there has to be something in there about like you've completed services, provided services for customers who paid in advance, something that tells you that you've already booked the cash, right? The cash is already in hand. You're just now making good on that promise to your customer that, oh yeah, we're going to provide services to you. In other words, something that would lead me to believe that I need to reduce the balance in unearned fees. So that's what this portion here, paid in advance, is telling you. If it's customers that had already paid you, you just haven't provided the services. So that's the key components to this description, so that you will, again, if I read this, this is the transaction I should book as a consequence. All right, next up we have buildings being debited for $25 million, cash credited for $8 million, and notes payable being credited more realistically in some of the other examples, for 17 million. So focus on the primary thing here is what you did. What you purchased a building for 25 million, paid 8 million cash, and the balance is secured by a note. That's all you have to say. You don't have to say anything more than that because, again, the math is right there. 25 minus 8 equals the 17, meaning somebody can figure out from this description that notes payable, and here is the plug, credited for 17 million. And then lastly, this goes a little bit beyond the parameters of this class, but so be it. Something you might encounter. Cash is debited for $50,750. We're going to credit notes receivable for 50 and credit interest revenue for 750. So what happened here is the company collected this amount, $50,750 cash, on a $50,000 note. So in other words, that was the face amount of the note, the primary amount that was owed by whoever the maker of the note was. And we also needed to recognize $750 of interest. Now you could say interest revenue, but it's implicit that if you're collecting on a note receivable, that the interest in question is interest revenue, not interest expense, meaning you're not paying something, you're receiving it. So that's why you don't have to even bring up the word revenue. It's implied that we're dealing with a form of revenue here. All right, and that concludes part 3 of the second homework set. So look for the final and fourth part coming up in the next one. See you there.